Hi everyone, welcome to Values. So today we're looking at Target, and they just released some worrying news for Target and probably the whole retail sector in general, because they just not too long ago they said their second quarter margin was going to be 5.3%. Now, a few weeks later, they've just released another announcement that says they're focusing on inventory optimization, which is basically going to decrease their margin to around 2%. So this is quite a worrying factor that, hey, this company gave a guidance a few weeks ago that their margins would be 5.3%, and now it's dropping to 2%. It just kind of shows you kind of how even the company itself is not able to have a full grasp of the situation, let alone them putting a forecast that for the back half of the year, they said they will expect around 6%. Now, what did their guidance say? Their guidance was a range centered around 6%. So they basically took the word centered out and then just put it in a range of around 6%. So it likely sounds like it's going to be much lower than that. So it's not centered around 6%, it is now around 6%. And that's just them putting out this guidance after they've messed up their second quarter guidance. Though you could say, change of plans than they originally had. That the inventory, that they just realized they had so much inventory and things are not looking good. Same thing with Walmart. So you've got a situation where Target has 43% higher inventory than they did on their usual years, and you've got Walmart with 30% inventory high, amounts of inventory higher than their prior years as well. So what happens when Target has a sale and then Walmart panics and has a sale? That's going to cause a lot of competition, all these retail stocks are basically lose a lot of money just trying to compete with each other to get rid of the inventory. So you kind of see where the trend is going, and it's quite a worrying factor for the stock. In the pre-market, it is down 7.75%. I think the stock has got a lot of room to drop. Like, it actually, when you look at the last past year, while most stocks have dropped heavily, Target has actually stayed pretty solid. That's because the earnings have actually still been quite decent. Last quarter, they did make like $1 billion in net profit. But I think this quarter, they look like they're going to be losing several $100 million, just based on the same numbers. Because if we take this, the second quarter kind of numbers, first quarter numbers, basically, they made about 5.3%. And usually the second quarter is very similar to the first quarter in terms of sales. So, but except if we adjust it for the margins, then basically they lose quite a lot of money because their margins are no longer there. And basically, I don't think the market's going to like this overall in the longer term. So, firstly, they just made an adjustment of that 5.3 to 2%. And then already that's going to interpret a massive red flag that, hey, I don't think their actual margins for the rest of the year is going to be around 6%. It's going to be likely much lower. But this is just management trying to just give you bad news in little snippets. And then basically, once the time comes in terms of second quarter, they're going to give you another forecast, and they're going to go, oh, actually, now we expect the overall margins to be less than 6%, and it's going to be a bit lower, and that's how they kind of work it out. Because if they give you all the bad news at once, the stock's going to take a massive hit. That, hey, the company is actually not as profitable as everyone's expecting it to be. At least there's still people buying the stock, and the problem is you should probably stay away from the stock for the time being, even though you kind of view it as a good stock or a good brand that has probably served you quite well in terms of a dividend kind of strategy. But right now, retail stocks are being hit left, right, and center, and it would probably not be that prudent to be buying into these type of stocks. The biggest question is, if you hold the stock, then that's the biggest question. Do you stay in it or do you get out of it? Like, that's really up to you. Like, for me, if I was in a retail stock, I'd probably be getting out of the retail stocks because they are not performing as well as you would probably want them to do. Especially now that we're actually looking at a very recessionary type economy that is not favorable to especially big retailers who sell, general goods. Like, overall, if you sell general goods, and you just watch all general consumers kind of hold back their spending, or the actual consumer doesn't actually have that much to spend, then it basically puts it in a really, really tough situation. And you can kind of see it far away that, hey, Walmart, Target, these large retail stocks are not going to do well. They're going to continue to fall quarter after quarter, and that's probably going to be the reality until we see a change in kind of dynamics, particularly with the interest rates. As the interest rates move up, it kind of draws more money out of the economy. Also, oil prices are moving up, which makes things way more expensive. And then, not to mention, like, management of these companies have kind of gotten ahead of themselves. They've ordered way too much inventory. It didn't sell. And also consumers are not buying as much, which is basically everything that you probably wouldn't want if you were managing a retail. But that's just basically what's happening, and that's kind of where I'm looking at this. And I'm going, it looks like a stock that's actually worth shorting rather than buying at this stage. Like, no one can actually tell what's going to happen in the third and fourth quarter. Maybe things do get marginally better. But right now, if we look at all the signs, things do not look that positive, and it's probably likely, if you're an investor, probably stay on the sidelines for now, and watch, what happens. Like, sometimes doing nothing is better than doing something, especially in the case of retail stocks where you go, the price is falling, this price looks like it's a good buy. Especially if you go, oh, if I buy it and I hold it for the long term, then it's not too bad, or I buy it for the dividends. But the thing is, at the same time, we're looking at a company that could be making massive losses, who doesn't actually have a good grasp of the actual situation it's facing right now. Like, for them to look at to not actually have a good idea of their whole situation around their inventory is kind of very, very worrying. And in the fact that they're going to have a massive sale to get rid of this inventory, along with Walmart as well, that's probably going to follow suit. Then it's basically just going to, all the consumers are going to buy all this stuff at very low prices, and they're not going to have an appetite to buy anything at a higher price. So I don't actually see it being favorable for third quarter, which, we're likely to hear bad news around that when the time comes, because I don't think management actually finds it favorable to let people know that things are actually going to be worse. They like to tell you bad things in little snippets, so that you do not overreact as a shareholder and just sell the stock down because it looks really bad on management. And yeah, like, that's just how management kind of is sometimes, because it's kind of a conflict of interest for them personally to give you all the bad news all at once. It puts a lot of pressure on them to perform as well, especially if they go, oh, actually, we're forecasting things to be bad. As it's always been, like, if a stock gives you bad news once, then if they give you a downgrade, then it's usually possibly just they know what's happening. But if they give you a second downgrade, then it's a clear sign they don't know what's happening, and a likely third downgrade is going to be coming in terms of those earnings. So that's why you want to stay kind of clear around these stocks for the time being, because like, the signs are clear. This economy looks like it's in a recession kind of trend, and retail stocks are going to be hit hard. If not, you probably don't want to take that massive risk unless the stock's selling at a super, super cheap price to compensate for that. Right now, it is not selling at a super cheap price to compensate the risk you'll be taking in buying these type of stocks at these prices, especially with the current economy. But yeah, until then, yeah, like if you've got any questions, post below. Until then, good luck investing, everyone.